Cramer. Welcome to Mad Money. Welcome to Cramerica. To my friends, I'm just trying to make you a little extra money. My job is not just to entertain, but to educate and teach. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. All right, this market's struggling with something real basic. It's just not doing a good job of valuing stocks, which is exactly what a market's supposed to do. In fact, it's valuing them wrong so often that I think it creates a ton of confusion. And that's a real shame, because this action is people getting fed up with the stock market again. You can feel it, I know. And just when we're seeing some very good gains from a host of sectors, people say, bye-bye, I can't take it. That's what I'm moping about after a solid day where the Dow advanced 214 points. S&P gained 0.58, but the Nasdaq climbed 0.81%. Once again, it was a solid reversal from early morning trading. This is the pattern. Let's start at the very beginning of a typical day in this market. I'm an early bird, addicted to watching the tape ever since I first laid eyes on it in 1981. It's a fascinating thing to track because the tape contains an unbelievable amount of information if you know how to interpret it. And I am a tape whisperer. The early morning action is the best place to start when you're talking about what the market's failure to value stocks is all about. The early morning starts the way it almost always does. This happened today. By 5 a.m., which has already been an hour later that I've been looking at the darn thing, the S&P usually down about 0.25%, and the Nasdaq's down between, I'd say, 0.45, 0.47 every day. I get that. We've seen stocks disappoint an awful lot this year. But as I tweeted yesterday and today, I can't find the reason why I say the Nasdaq would be down 0.47, given that nothing happened since the close of the day before. Nothing. And look, I'm always as current as possible on upgrades and downgrades from the night before. And again, nothing could justify stocks looking that ugly this morning or yesterday or, well, most of last week. So what is happening? Are the futures lying? No, they're just plain wrong. Let's ponder the first mistake this market makes. We're regularly getting sellers right from before the get-go, because what are they doing? They're positioning themselves for President Trump's potentially angry and rash statements about trade, about China, about attacks on Apple, attacks on Walmart, or maybe even Nvidia. They want to sell stocks short to profit off the president's next furious Truth Social post because they know the market will take it negatively. Why? Because it's negative.
The House of Pain.
When he said so much for being Mr. Nice Guy about his somewhat critical views of China, he made the short sellers some real good money very fast. When he attacked Tim Cook for moving out of China and then going into India, or when he chided Walmart's Doug McMillon for having to raise prices, even after Walmart cajoled Chinese suppliers for breaks, then he was practically printing money for the pessimists. When some anonymous source in the White House said Nvidia couldn't sell the chips it wanted to Chinese customers, effectively blocking the company from a $50 billion market, the shorts cleaned up. Oh, for them, it must have been a thing of beauty. I get where the shorts are coming from, but their strategy doesn't work if the president keeps his mouth shut and doesn't go to the, or whoever posts the stuff for him. They just don't get it up there. It's an outright failure when the day's tone is set by the considered, level-headed, calm, coherent, and thoughtful Secretary Besson from Treasury. And I hope my saying that does not get him fired. But when Trump reminds us of how horrible all of our so-called trading partners are, yet what a bunch of fiends and fools, when he puts out deadlines for the best and final offer, when it's possible the Supreme Court may take the case and strike down the tariffs, well, shiver me timbers. That's why the overall market's often wrong and regularly changes direction. Today, for sure, was a Besson day, not a Trump day. And that's the recipe for a good session. Second, the market remains way too skeptical of the need for more AI infrastructure. Ever since we heard that the Chinese said something that was supposedly better than Nvidia, the industry's never regained its luster. The stocks of companies even remotely connected to the data center, think Eaton or Cummins or Vertiv if you want to, they've lagged terribly. Oh, and Nvidia, for months, it was a chronic underperformer. But hey, it turns out the bear case on AI may have been dead wrong. For instance, have you seen the stock of Nvidia? It climbed from $86 and change at its lows in April all the way to the mid-130s when it reported an incredible quarter with an amazing forecast, much better than expected. Stock then rallied to 143 after the quarter, but then it was thrown back when the White House refused to let Nvidia sell China even its lesser semiconductors. The stock gave back a big chunk of its post-earnings gains, and the shorts, well, they were in there. Sell. Congratulating themselves, patting themselves on the back. We realized The market got things wrong today, though, when we saw Meta's lining up 20 years worth of nuclear power from Constellation Energy for AI. You don't sign up for 20 years worth of nuclear energy with a plant that's about to close 3 years from now because you think that the data center's dead or dying a slow death. Next thing you know, NVIDIA's right back to 141 where it went out today. What a relief. Of course, the whole time you could have gotten a clear read on the data center by looking at the action, the pin action, I should say, in CoreWeave. This company builds data centers and then rents out its computer power to some real heavy hitters. CoreWeave had the misfortune of coming public a couple months after DeepSeek, the Chinese company, created an AI model supposedly using far less hardware. They had to cut the size of the deal, and the IPO, they took it down to 40. It started, really, this thing priced at 40. It wouldn't have come public at all if it weren't for NVIDIA taking an anchor position to ensure the deal worked. Now NVIDIA is so huge that its 24 million share position in CoreWeave are now $150 stock. Really doesn't mean anything to them. But if you bought it right after the company came public, you've nearly quadrupled your money, thanks in part to a data center licensing deal with Applied Digital that sent CoreWeave up 25% today. So what can I say? It looks like people are wrong again. Then there are the dollar stores. Talk about wrong. Now, there's this sotto voce belief on Wall Street that consumers in this country actually still feel flush. So they're staying away from the dollar stores when you go, those are places you go when you feel times are tight. This morning's report from Dollar General put that thesis to bed. CEO Todd Vasos told us about a recent survey that the company did where their customers reported having, quote, less income than they did a year ago. And nearly 60% of our customers noted that they felt the need to sacrifice some necessities in the coming year, end quote. Mind you, necessities, not red Solo cups, not plasticware, okay? We're talking about skipping everyday basic needs. And it's not just lower-income people who feel the pressure. Vasos said they're seeing plenty of middle-income and even higher-income customers coming into Dollar General. They went out of their way to say that they'll do their best to make price increases their last resort, but it sure sounds like they may have to raise prices. They sorted a huge amount of stuff from China. I mean, huge. So here's what I say about that one. Just don't tell the president. And that's how so many people got Dollar General wrong, allowing the stock to soar nearly 16% today after reporting a great quarter. When you examine the market's mistakes, they share a common theme. The president's distorting pretty much everything, especially with his tariffs and his jingoistic approach to the rest of the world. And it's continually confounding traders and investors alike. People would just rather be short. They expect the market to come down every day. Plus, I think that Trump has almost single-handedly revived the short-selling business. The hedge fund sense that money can be made by betting against stocks again. I know for a fact that lots of hedge funds, which gave up shorting after the time of GameStop, are now back with a vengeance. They place big bets every day, betting that Trump will crush some company with a well-timed Truth Social post. The short sellers aren't in charge, but they have a lot of firepower and a lot of conviction. They take strong positions like those against NVIDIA or CoreWeave or Dollar General. And when the tape is ugly, they crush those stocks because they figure they can't lose as long as Trump's in the White House. But the bottom line, these short sellers, they've grown way too confident. And today we found out they can lose big because lots of businesses are doing great. It's just that Wall Street only notices on days when the White House doesn't take up too much bandwidth. Oh, and thank you, Secretary Bessent, for your measured, cerebral approach. I actually find it a breath of constructive, fresh air. And your demeanor is duly noted right here every day that you represent the White House. Bill, oh, my old friend Bill in Massachusetts. Bill!
Hi, Jim. How are you?
I am doing well, Bill. What's shaking with you?
Hey, listen, can I quote you from a morning meeting from last June of last year real quick?
Why the hell not?
Always be tough on your portfolio. Focus on the worst stocks. Never buy all at once. Sell into strength. Don't fall in love with stocks. Give your stocks a hard time. Don't blow out of positions. Like stocks less as they go up. Study valuations and get tough. Sell into parabolic moves and market rallies, Jim.
Man, that guy's got horse sense.
You said that on the morning meeting of June 18th of last year.
Well, that had what I call clarity. Clarity of thinking.
That's how I learned. That's how I learned from you. It's amazing. It's amazing.
Thank you, buddy.
So
Thank you. Thank you, buddy. That makes me feel great. And you see, what Bill's referencing is Jeff and I do a program from 10:20 to 10:30. And, you know, other than my mother, no one watches it. And actually, my mother passed away 45 years ago. She probably hasn't checked in and watched it either. But Bill watches it. We just found out about that. Bill's a watcher. Bill watches. So, Bill, how about a question?
Yeah, Jim. I asked you a couple of months ago about GE Aerospace.
GE Aerospace, Bill, is about as good as it gets. That guy from June of last year, he knew that GE Aerospace was good. That guy's so smart. I got to get him on the show. Anyway, Bill, thank you for saying those kind words, and I truly love GE Aerospace right here. Oh, no, do we really have to cut away? I had Stafford in California coming on. You know Stafford's one of my pal buddy friends. All right, anyway, you've heard it. I didn't mention the Wells Fargo lifted its asset cap. You know, hallelujah to that. But you heard it. The market just keeps getting it wrong, and that's because they keep hoping for a post. And when Secretary Bessent out there with his very consistent, non-mercurial behavior, the stock market goes higher. What can I say? It's just a reminder of just how wrong people can be when they think it has to go down, no matter what. On Mad Money tonight, the negativity surrounding Salesforce. Oh, holy cow, is that palpable? But is it justified? I'm going to share where I come down after the company's recent earnings report. Then, is the market getting it wrong with its reaction to Dell's latest quarterly results? I'm going to dig into the numbers, tell you where I stand. And are the crude oil bulls in for a rude awakening given the commodities relationship with the dollar? I don't know. Why don't we go off the charts to find out? And I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.